Hey everybody, this month on Technical Tuesdays, I sat down with my friend Anthony Maceroni. Anthony is an independent swing and position trader, and when he's not trading, he's working as an electrician. Anthony is proof that you could have a full-time job and be a full-time successful trader. You just have to find a strategy that fits your personality and schedule. In this episode, Anthony shares with us his process for drawing trend lines, his edge in trading breakouts, how he journals trades, and he gives us trade examples using a breakout strategy. Before you listen to the interview with Anthony, I want to mention the Technical Analysis Guide by RJO Futures. I have it downloaded on my desktop, and it's a great resource for the basics of technical analysis. So if you're interested in learning about the basics, or if you're like me and you like to have a solid resource on the basics of technical analysis, I highly recommend you download this free PDF located in the show's post. So without further ado, let me take you right to the interview with Anthony. And you post a lot of charts on Twitter with technical analysis on them. What's your favorite technical analysis tool and why?
Well, I like to keep it simple, basically as simple as possible. I could either just draw a downtrend line or something horizontal, or also an uptrend line, ideally down and horizontal. I like to see 3 points of resistance that will be met for that resistance. And then after that, I'll watch, I'll wait, and I'll see what's going on at that point. I know a lot of people do draw their own trend lines, and it's kind of really step back, and it could be somewhat subjective at that point. It always is, really, but it matters what really fits your style. So if you can see something fit and over time kind of prove itself, it will warrant a justifiable entry.
So what criteria do you have for drawing one of your lines?
I'd say number one, but this isn't always the case. I'd like to see the 3 points of resistance to be met. It kind of really proves that, yeah, this is resistance. It's not just something you want to see or something you hope is the case. So after those 3 points are met, I really start to begin to stalk the chart. I'm not in a position at this point because I always wait for a closing. I like to see that close above before I get really bullish on it.
You mentioned that ideally you like to look for downtrends. Why is that?
So I like looking for a downtrend because it's still the overall trend is up, but in that shorter time frame, using a weekly or a monthly chart, I like to see that downtrend kind of prove itself that it's just a consolidation phase. So I'll look for those points of resistance that I mentioned before, and then I'll watch for the breakout. The breakout is something new. It's like a new chapter or a new page, and it's almost a new phase. The price per share kind of proved itself at that point, and there's something going on. So that's when I really start to get bullish or would even enter.
So to be clear, what you're looking for is a longer term primary trend to be up, but a shorter term time frame, the trend to be down, and then the breakout of that, which keeps the primary trend still intact, the longer term.
And you pretty much described my style better than I did. So I don't even know how to I don't even know how to reply to that. That was perfect. That's exactly what I'm looking for.
Okay, so I should clear it up for everybody. You trade more on a swing basis. So you're not intraday trading every single day. You look for longer term trends and then for, like you said, a shorter term time frame to give you something to then participate in that longer term trend. And I know that you and I have discussed this in depth in the podcast, so we don't need to go back to as to why you specifically chose this type of strategy. But I'm curious, did you backtest these downtrends or any of the lines that you're doing? Because to me, it sounds like it's very discretionary. And if so, what did the backtesting tell you?
Yeah, so I definitely backtest. Not at first. When I first started, it was always kind of like, well, this is what the book said to do, so I'm just going to do that. It really doesn't work like that in reality. So over time, you start to just look and say, what went wrong here? Because I always tell people it's best to visit your losers more than your winners. So you start diving in and you check things out and you're saying, what went wrong? Back to my 3 points of resistance, maybe those weren't met. Maybe there's only two. Maybe it was 4 and now it's nothing. I like to really focus on that 3. But over back testing, I've realized that, hey, this is something that kind of proved itself consistently. And then you pick up more tweaks and adjustments from doing that. And I did see that out of all of my styles, when looking at what went wrong, this had the least amount of failed trades, was looking for those breakouts and those downtrends or the horizontal resistance.
So were you journaling along the way?
Not at first, but absolutely now, and for years now, it's a must. You have to log everything that you do.
How do you go about your journaling? Because I talk to many different traders and there's a lot of different approaches to this. Some traders say to me they have to print up their charts because they like to write on them and they feel that there's that connection between writing them on paper and then they save the charts in paper form. Other traders just dump their trades into an Excel sheet and they look at them that way. Others write on their charts electronically and then save them in PDF form or something. How do you go about your journaling?
It's got to be visual with the chart for me. So I used to print them out, but I just log them all and just save them all in a file on my computer. But I do see the actual chart for that time frame, and not just that time frame, meaning like weekly or monthly, but when I was looking for a position or when I was holding that position or right after I exited that position. I'll have that all within there. So it could be a year. It could be like, say, 2016, January to June. I'll have that all on that one chart, and I'll always visit it. I always visit that one specifically, but I'll always visit when I held that position.
Now, do you save those all in like a OneNote or something like that to where you can go through and just identify what you're doing and when? I'm just curious how you organize all of those charts.
Yeah, I have a lot of screenshots. After a while, I don't really revisit them. Something from 5 years ago, I might pull up, because I'll remember it and say, oh, that's probably a good example to use here, or it's a good reference. But I save a lot of stuff on stockcharts.com, and it's just so simple to bring anything up. And that's all I do really for a swing trade.
Yeah, and I noticed that you do a lot of posting of charts on Twitter too. And for some people, to them, it's like it's an exercise. It's part of their routine, and it kind of holds them accountable for the trades that you're doing. Do you find that that's the way you feel about it when you're posting on social media?
Yeah, that's exactly how I feel about it. I almost kind of feel bad saying I don't really post for my followers or any followers. Like I really post when I post a tweet, I'm really talking to myself. That's just how I go about it. Of course, I care about anyone that could be influenced by something. I like to educate people and really guide them along the way if they want it or need it or whatever. But when I tweet, I'm pretty much tweeting at myself, and I spend more time looking at my own page than I do on anything else on Twitter, just because I like to keep it as a journal and some mental notes, but logged down so somewhere I could just see it and just revisit it and just bring it up, no problem.
Yeah, I love that about you, Ant. And you know what? To me, those are my favorite people to follow on Twitter. That's why you're one of my favorite follows. And I want to talk about your edge. What do you feel your edge is using trend lines and horizontal lines for your strategy?
Well, the edge is in the breakout, and it's funny because the edge isn't not like it's not something I say on my edge. It makes me $1 million because it's definitely not the case. My edge is I know where to cut my losses. So using a breakout for me as a breakout trader or a breakout buyer or investor, however you want to word it, it shows me that either it's an entry or it's failed. So the edge in my sense, or in my case, is I know when to just cut my losses and just move on.
Well, let's walk through a trade example. Let's start with an entry. Talk to us about how you go about an entry.
Okay, so right now, I'm in Netflix. I entered this I got it right in front of me right now. So I'll bring it all up. So I entered this it was late January. Simple downtrend. Resistance met 3 times. Broke out. Weekly close above. So I was in. That's all it took. It didn't close. Luckily, it never moved intra-week below that, so I didn't really get shaky on it. It just kept going ever since. Not too much higher, but it's still pending. And all it was the trend line breakout, close above to close at the point. And that's it. I'm in it.
So you've already mentioned, you said that a big part of your edge is you know when to burn out of a trade when you're wrong. How do you determine a stop for a trade like the Netflix trade?
So I determine the entry, right? So the entry is X price. So at X price, if the share was to close that week, or the time frame I'm looking at could be monthly, if it was to close that candle below that, that's my loss. I gotta cut it right there. I gotta move on. But it could get dicey because midweek or mid-month, especially on monthly charts, you could drop below it tremendously. So if you see like a huge volume spike, maybe that might be an indicator to get out before waiting for the candle to close. But I really, really like to hold it until that candle's closed out.
Walk us through an exit, because you're obviously not holding on to these forever. Everybody wants to hold on to a winner forever, but at some point we all look to get out, even on your time frame. How do you get out of a trade?
So I already determined the next level of resistance. So looking at the Netflix chart, and like I said before, I like to really emphasize closing of these candles. So I'm looking at 411, 410, maybe even 415. So 411 was a high close for the weekly chart. So all I do is simply extend that resistance line horizontally across. That's pretty much my target at this point. So if that's met, I will exit it there. But now that's, like I said before, a resistance point. I'll watch for a breakout above that and treat it as a new position, a potential new position, to look for a re-entry on a weekly close above that.
Couple of questions about that. Number one is, what if a market that you're looking at is breaking out to all-time highs and you don't have resistance above?
All right, well, those are my favorite because, like many people, we call it blue sky territory. So in Netflix's case, that would be a perfect example, because at 411 I spoke about, with regards to closing price for the weekly chart, there's no resistance above that. Some people will use measured moves for some resistance, but essentially there's nothing there. So now it's in blue sky territory. I kind of let it do what it wants to do. So now in this case, I only have my stop loss. I'll let it run. That's it. So either I take a small loss, or it turns into a much larger gain. You need a lot of patience for this. So your swing trade could become your longer term position, which is the case for my portfolio right now.
Another question. Let's just say that this thing runs on you right away. It goes your way. You already have your stop in place, but now you've made, let's just say, 1 to 2 times what you were willing to risk. Are you trailing a stop? Does that not matter? I'm curious if you ever are adjusting your stops if you have a good amount of profit into a trade.
It's a tricky one. Depends on a lot of things. Overall market conditions too. If there's a better entry on the horizon that you could jump in. But ideally, and I still struggle with this to this day, is I like to eliminate all trailing stops, and I just want to have my stop loss. So either I take that loss or I take a gain. And obviously it would have to be a big gain, because it's something that you will hold over time, or you just get triggered out at that loss. I'm not sure if that answers your question.
No, it does. I get it.
Okay.
Now, how about you take us through a trade that you're currently in or did in the past and explain to us why you took this trade?
Okay, so a trade I took in the past, and I like this question because I get asked a lot, and this is my go-to example for a good chart that shows everything that I really like to look for. So the company is CyberArk. I was using their weekly chart, and on the weekly chart, it was basically out of IPO. This thing was a runner. I kind of tried to trade it, but I kind of tried to trade it. I'm sorry. But it just didn't work out. But I still stuck with it. there was a lot of fundamental things I liked about it. So I watched. It was now in a downtrend after it hit all-time high. I didn't really get involved with it at this point, but I just started getting that like stalk phase, is what I call it. So 2016, it kind of bottomed, but I never look for the bottom, so I wasn't concerned about that. So you see the uptrend started going up, and in 2016, and kind of met mid 2016, like a new recent high. Not really a recent high, but for this new potential position or pattern, would be the best way to describe it. So it started to trend over time. I'm watching something, seeing something go on. It met a 3-point resistance that I like to look for. By the time 2017 came around, you could see there's a trend line that started to form. So I would continue to extend that trend line over time and watch for a breakout. Nothing happens. And then by early 2018, you could see that there's a breakout that formed. There was that close above that trend line. And then that was my initial entry on this position. So I treated that like a fresh position because it was, but I already knew where I was going to exit based off of that new pattern's high, which was I believe it was in September. So I extended that line horizontally, treated that as my exit, and also re-entry if it could break out above that.
And this was great. What I love about your style is it doesn't really matter what time frame trader you are. This works on pretty much any time frame, because if you're looking for that longer term primary trend, regardless of where you're identifying that, whether you said it was a monthly, weekly, or a daily, somebody could look at a shorter term time frame to see a downtrend or an uptrend, depends on if the market's in a bull or a bear market, and look for that potential breakout. So great examples. Thank you so much for spending time with me today on Technical Tuesdays, Tone or Ant. Where can people find you on Twitter?
You can find me at Anthony Maceroni. I'm always there, always posting. And that's it. Thanks a lot, Ant.
Thanks for tuning in for Technical Tuesdays. Remember, if you're interested in learning more about the basics of technical analysis, or a veteran like myself who likes to have a basic technical analysis guide for referencing, please download the free technical analysis guide on our website under this Technical Tuesday post. Cheers, everybody.